What's going on, you guys? Investuous here. Today we're going to be talking about how you can make money while the market is going down. So a lot of people have been heavily affected by the COVID-19 outbreak. Numerous lost their jobs and most people are just staying at home due to isolation. This is a big problem because those that lost their jobs lost their main source of income. So how can you really make money during a market crash? The answer is to get involved in the stock market. You can invest some of your money and short the market. Shorting the market allows you to profit when stocks are falling down or decreasing in price. There is also a simpler but more on the long-term approach. Since most stocks are falling, their prices are essentially at a discounted price. Now would be a good time to buy stocks and just holding them for months or years when everything settles down. Statistically speaking, stocks will eventually go up in price in the long run. So having a long-term approach will definitely net you some gains. Now some of you might think that I probably missed the time to invest in the market since everything is already down. That is completely wrong. There's definitely a lot of opportunity if you watch the news and how you could utilize the events that are happening right now. Now some of you might also say that you don't have a lot of money to invest in the market. How can I make some gains in the short term? The answer to this is options. Options trading can be very profitable, but also very risky. Part of the reason why I like options is that you can invest a small amount such as $500 and you have the potential to 10x that amount. I've seen a person turn $500 to $40,000 in one trade. I've also seen someone turn $172,000 to $9,000 in 1 month just from options. One of the biggest reasons why it's risky is because it has an expiry date. The closer it gets to your expiry date without much movement on the stock price, the more time decay eats up your investment. If you don't hit your strike price before the expiry date, your initial investment will be fully exhausted or will have very minimal value. Just like with anything, for you to make money, you have to take certain risks or you just have to be lucky, or you were born with it. So if you want to make money in the short term, taking big risks is the way to go, I guess. Just like how in stock trading there are long and short positions. In options, trading those are called calls and puts. Having a call option means that you're expecting the stock price to go up, and having a put option means that you're expecting the price to go down. There are many different strategies when it comes to options trading. One good strategy is those that focus on volatility and sell premium. The best way to find a strategy and to get some experience with trading is to paper trade. Thinkorswim has a practice account that is great for paper trading. Their platform is great and I love it. The other option is to just dive into the market and learn your way as you go. This is a good option to take because it makes you take action, and the only way you can make money is through action. Now you will most likely have some losing trade, but that's okay. It builds your skin and experience. It'll teach you how to refrain from those mistakes in the future. Currently, the market is heavily affected by the macros or the news, especially since the COVID-19 is definitely impacting the whole market. A good opportunity that I took part in was a few weeks ago in March, during the coronavirus economic fallout. The market was crashing and the Fed decided to do an emergency rate cut. A good analogy to this is if you have a wounded artery and the government decides to put a band-aid on it. It'll help in the very short term, however, it won't fix it and eventually it'll hurt even more. This is what happened in the market after the Feds cut the rate. The market went up shortly, but it ended up causing more panic, which resulted into a significant fall in stock prices. Knowing how these news affect the market will enable you to take opportunities. Another good thing to look at are the earnings of the companies. If earnings exceed analysts' predictions, it'll have a good impact on the stock price. At the end of the day, it's up to you to find a strategy that works. Now, I'd like to give another example with what happened recently, specifically a few days ago with Tesla. So Tesla reported their earnings and they exceeded the analysts' expectations and the price of it surged up after hours. However, the next day, Elon Musk tweeted that the stock price shouldn't be this high in his opinion, which caused a really big significant downturn on it. Now that was another opportunity to take if someone was watching his tweets. They would have gotten a position much earlier than riding the waves. So obviously trade at your own risk and only invest what you're willing to lose. Everyone has a different risk appetite. Most important thing to do is to maintain consistent profits. Having one big win won't mean anything if 9 out of those 10 trades means that you are losing. It's better to have 9 short wins and a small loss. This means your risk management is excellent and not lacked. If this video helped you out or learned anything from it, please give it a like. Subscribe for more videos. Trade safe.